But it's pretty damn tough to get someone who quote unquote has everything to find a new purpose in life. But guess what? These people are also looking for purpose. I got this question like a million times. How do I find that first angel investor? Or let's say that advisor that can actually forward and scale or fast track my company. Turns out it's just nearly impossible. You know, people that really give a shit and that are helping so many other founders or people succeed in the ecosystem, they typically are not rewarded by anyone. It's connecting the connected. It's people that are already in power and play talking to people that are in power and play. It's a party for the few.
Today we are in Amsterdam. We met up with Ton, an investor, connector, and generally interesting person. I tried to ask questions from the founder's perspective, questions which could be interesting for founders. We discussed how he became an investor, what's his journey, and discuss other interesting investment-related topics. Let's go. From your LinkedIn page, there are so many things that you do. I kind of boil them down to you being an investor. You organize the PHX, and you also invest for you're like investor in residence for other companies. So that's what I perceived. What's the actuality?
Well, I think that's about it. I mean, I'm actually a former startup founder myself. I exited my company about 7 years ago. Turned into venture, and then actually quickly discovered that there's much more to the surface and much more to be done than just investing. So I quickly started sharing my time 50-50 between investing and actually I would say more the community play and helping out and see where we could create more transparency or openness in the ecosystem and actually help out.
Okay, and practically, as I know, you worked in the corporate world, and then there was this event where you were just actually pitching for your company where you were working, and then investors just approach you, and that's how you started, right?
Right. I mean, it was a crazy coincidence. I was just giving a pitch on some kind of marketing program that we were building for the corporate, and I did in my head actually make up my mind and decided, corporate life is not for me. Took the experience with me, and the moment I was giving the pitch, and maybe that's what they call flow state. Two investors reach out, and they actually gave me the opportunity to start an idea from scratch. So I took that and started building.
And then you created an accelerator?
Right, yeah.
Yeah, it's the company that you sold, that you say?
Yeah, the second one. So the accelerator was the first experiment. I mean, I've made so many mistakes with the company. Primarily we started without an actual model. It started with, to be really honest, without the exact idea. And then we copied the Dragon's Den type of setup. So we invited a bunch of entrepreneurs at our home table, started asking the questions, and we thought, okay, this cannot be easy. We can do this ourselves. So we invested a small amount in one company. Turns out, the entrepreneur was building this product for 20 years. He struggled a lot with having someone externally bring in. I was, much younger at the time, thought I could come in and become the interim CEO, help them out. So I quickly learned, let's say, the hard way, how not to actually invest and engage with other entrepreneurs. And then the second one, we got a little bit more lucky, yeah.
Because you said you made all the possible mistakes, right? In the first one, okay. And how did you actually find those first investors? Did you already have the connections back then, or you cold approached them?
Like I said, this was pure luck.
Not those two, but you said that you bring them together to the table and other investors, right?
Right.
How did you find them?
The other investors, you mean?
Yeah, that you brought to the table.
Well, I mean, I quickly found out that, and that's also the reason why I built the accelerator, is that if people perceive you as a founder, you're standing on the other side of the table, and it's similar towards having a company that's pitching a product to a corporation. You're already down 0 to 2 because the corporation has this big standing, they have the money, and you're trying to pitch for it. And then so with the perception of building an accelerator, actually, it became much easier to connect and find other angel investors and business angels at the first instance. So that's actually what kickstarted the network growth. And from there, once you're in, which is, I think, a good thing. And it's also, to be honest, one of the most unfair things that I think that exist in current society.
That it's hard to reach out to those people, or?
Yeah, it's hard to get in at first. So I mean, I got this question like a million times. How do I find that first angel investor, or let's say that advisor that can actually forward and scale or fast track my company? Turns out it's just nearly impossible. It's either luck or you have to manifest it and make it happen. But like I said, once you're in and you find those first connections, the referrals come in much easier. And if you're very transparent, open, and very careful with developing the network, you can grow that out really fast.
So later on, then you sold another company. You said after that accelerator, there was another company you did. Was it in the e-commerce field, I guess, right?
Right. So I tried to build the world's first programmatic trading platform on top of social presence. And this is also the reason why it failed at first, because the pitch was way too complicated. And after 3 years of investing all the money that we had from the investors and also all my personal cash and actually all my belongings, I rephrased the pitch and started upselling. So instead of the price point of having €1,000 for a product, I said all of a sudden, this is 100,000 worth, and that's a minimum price. And all of a sudden it worked. So I simplified the pitch. I told people that I was actually selling sponsored tweets from celebrities, which was the case. Not mentioning the programmatic trading or all the work that we put in the back end, and it started working really fast. But it also caused several issues, because the acceleration meant that the people that were already in the company had to be informed, and that's the other big lesson I learned as an entrepreneur is like you have to be really, really careful with who you work with, and it's actually not really about the money. It's more about that first contact, the gut feeling. Does it feel right? And if that's the case, then you should engage. If you feel that something might be off right now, because it's essentially like a marriage.
You mean between investor and you being?
Yeah, investor and founders, and building the culture of your company. Because if you can't do that right from the start, it's really, really, really tough to build in a good culture afterwards. Yeah.
And so, like, kind of all the goal was. So basically, later on you sold it, right?
Right, I sold it back to my investor.
Because also, when I look from a side, I'm not really deeply in the investing scene. Like, how do people start being investor? Right. Where do they get the money from? So, is my vision then correct? Like, the first kick was probably you had some savings, then these two investors came in, and then there was this initial money to create the second company, and then you sold it, and you had some spare cash that you could start investing.
Like I said, it was slightly different this time around. So what actually happened was that when building the company, I was pretty persistent, right? So I didn't have any investors that I knew. I was trying to get in touch with everyone I could find.
Even through you already had this accelerator still.
Right. So it was still pretty tough to get in the first game. So I started to be honest, I also participated in a lot of pitching competitions, won quite a few. I'm not a big fan of those anymore, because I think they usually actually not really provide that much value for the company founder, but more for the organization or the event organization. And I absolutely really don't like it when they price something on top of that to the companies. But to me, it helped to get a little bit of access. I had also kind of luck with my co-founder, was a pretty big familiar celebrity back then. So we had these hacks that we put in place. So for example, he would be interviewed for, let's say, the premiere of a new film or movie online. He would walk the red carpet, and then minutes before I would actually pitch the new company product to him and say, okay, well, this is what you have to say. And then he would actually go on television, and then they would ask, so what do you thought about the movie? And he would literally say, well, it's funny you ask, because we'd spread the brand, and then he mentioned the company name, and then my co-founder, my Swedish programmer, was in the attic office, just upping the Amazon cloud storage and server space to manage all the incoming subscriptions, because that works really well. So we kind of hacked our way into getting a little bit familiar, or a little bit more known, and then all of a sudden investors started reaching out to us, and then of course all the tough questions came.
Because a quick remark, you mentioned that you don't like when these pitching events that it's being priced for the investors, you said, right?
Well, so the benefit from the investor side is obvious, right? So these events typically allow investors to engage with other co-investors. They need that because you want to mitigate your risk from an investment perspective. So it makes a lot more sense to invest together with someone else than just to go in alone. So that's one. The other thing is, for the investor, everything's set up really well. They typically don't have to pay entrance. Sometimes they're flown in, especially within European tech events. And then, for example, they get access to, let's say, a highly exclusive dinner where they can then connect and meet up with other investors or limited partners, which are essentially investors that invest in the investment firms. Mm-hmm. And because of that, for them, the value is already gained. And the question is, are they going to meet the company founders that actually want to invest in? And does this typical event, is this event even able to find the right founders to connect with these investors? And I think that's 99 out of 100 times it's not the case.
And then later on, so you saw, and you started investing in, because you have quite a list of the companies you invested personally.
Right.
Is the correct term. If it's not a secret, what's the like? How many companies are there? Around 10 is like a rough guess, a rough estimate from the LinkedIn.
Yeah, so they're not actually not only personal investments. So what happened when I was still a company founder, I started pitching to some pretty well-known venture firms. And I remember my first pitch in Berlin, where I got invited to pitch to the Somewhere brothers, from Global Capital, the former founders of Zalando, for example. And I realized, wait a minute, by the type of questions or the answers to the questions that I asked the investors and the questions and the answers that I was getting from the investors, I realized, wait a minute, not all capital is created equal. Some of these guys and girls really, really know their shit. So I started looking into, okay, so if that is the case, I should not actually try to raise money from anyone, but try to find the best investor to become an advisor in my company as well. And so at that time, I was pitching at this one particular competition, and the founders of Keaton Ventures, they saw me pitch, they reached out to me, they were actually looking to engage potentially for an investment in my company, which didn't happen back then. And afterwards, when I was out of my company and the company was sold, they actually reached out to me and said, hey, do you want to become a CEO of one of our portfolio companies? To which I said no. And then he asked me again, and I said no. And then they said, well, maybe you should join us as a venture partner. And that's actually how my investment career began. So I came in from, let's say, from the left side, and then, together with them, I started building Keaton Ventures, which was a Rotterdam-based Dutch venture firm investing in, seed investments up until 500 to 600,000 euros per ticket. And with them, we made 14 investments in total. Some well-knowns are, for example, let's say ABOS, which is an artist management agency software, or Otrim, which is doing really well right now also. I just raised a 9 million round from Index. And yeah, so that's how I built up my portfolio.
And you invest in European companies?
In the beginning, only in Dutch companies. And like I said, it's a pretty interesting mix because, to be really honest, it's a dream role, especially when you're a generalist. Because
if you're what, generalist?
Yeah, if you're a generalist, because the founders you talk to educate you on the market. So you read up on research, you get access to, let's say, the biggest databases on the specific technology that you look at. And then, you have thousands and thousands of conversations with founders who actually, provide you with the different market data. So you build up intelligence around a particular topic really fast. And then all the people you talk to are actually highly engaged, and they want to either save the world or, challenge humanity or build a billion-dollar company. So you're talking to people that actually want to build something. So that makes it super enticing. But I also found out that, the investment game alone was just not good enough, because what started, it was not personally frustrating, but what frustrated me was that a lot of the founders that talked to me, they said, well, if you're not investing and you're one of the earliest in the Netherlands in that particular case, right, in 2015, 16, who do we reach out to and how do we connect to other investors? So I started finding ways to pay it forward and providing more and more introductions, but that doesn't scale. I mean, in the end, I was doing, let's say, 20 to 30 introductions to people in my network every day. I'm still doing that, but I couldn't make that 100 or 1,000. And I started realizing there was like a discrepancy, or let's say an information bias in the industry, whereas because of the lack of transparency and knowledge around how the investment game actually works, especially with inexperienced and first-time founders, there was like a complete disconnect. And that's what I wanted to start solving next to Keaton. So I started traveling Europe a lot. I talked at most of the big tech conferences, built up a pretty extensive network by traveling to more than 80 cities in 3 years' time. And when I came back from those travels, I realized, okay, I want to do something that has more purpose than just select 4 or 5 companies a year to invest in. And that's how I kickstarted more or less, my personal mission to help as many founders as possible to fast track to whatever it is they want exactly.
Okay, and then from those lists, because the statistics usually around startups is around 8 to 9 from 10 fail.
Right.
What was was it like following your investment spree this like heuristic?
Well, I mean, there's the typical rule in venture, and depending on which stage you invest, the metrics change. But for example, in our case with Keaton, or let's say even a bigger venture firm, let's take a venture firm that has 150 million euros to invest. They would typically invest into 20 to 25 companies in a period of 5 to 7 years, and then the divestment period is 2 to 5 years. So they do 20 to 25 investments in tickets to 1 to 5 million. They save half of the money in the fund to double up and back the winners, right? So because, for example, you do one investment, but then when the valuation increases with the next investment round, you still want to double down on the winners. And then for this particular setup and this particular fund, on average, one gets back just the money and one returns the entire fund. So out of 20 to 25 companies, there's only going to be 1 or 2 winners. Okay. And of course there's a lot of models. So some more operational VCs want to, for example, make sure that they have more winners in the portfolio, but that's how the game works. Of course, if you go later in the growth stage, so let's say you invest in the Series C rounds, tickets of 50 million or 100 million upwards, then you cannot really afford to have any losers in your portfolio because the amount spent is so much on the total fund as well. So the dynamics change per fund.
Okay. And you've been in this like niche, in the startup one, and like people, there are different ways to invest. Indeed, like people invest in index funds, and specifically the stocks, and do very early stage. And there was this bet that Buffett made with other hedge funds that they will not outperform just the market over like 10 years. Do you see like the same dynamic that index funds are still like the average, that like in the startups, like they like majority of these how do you say, these early stage venture capital companies, they are under the regular market, or they are able to outperform that also, or it's really like it's just like with the big companies, it's exactly the same?
Well, you have to think about how this actually works. I mean, so let's take a particular sector or vertical. Let's take fintech. Let's say that in the Netherlands right now there's about between 500 and 1,500 companies, startups working on a particular technology, trying to disrupt market A, B, or C within the fintech space. Out of these 1,500 companies, there will be only several winners. And I will almost say unfortunately, which might sound crazy as an investor, but I don't think that system is really fair towards the future. But the market has most of the markets have a winner-take-all mentality, right? So you have a platform like Airbnb or Uber, and they take it over entirely up until the next platform takes over. So there's just it's pretty tough to become part of that, let's say, top 1% of companies that actually return the investment to the founders and return the investment to the investors. And then in terms from an investment strategy, let's say that you're a private person who actually sold this company his or herself, I would not recommend going into venture. I would also not recommend going into angel investing unless you have significant amount of capital, quite some time, and you're ready to experiment, because the chance that you're going to hit a home run with an investment based on the fact that a market is also about qualifying and quantifying all the investment opportunities and then finding that particular winner of that market are very slim.
Yeah. In general, what do you see in the startup scene? Like, there was this graph, I can't really quote it, like the original source, but in US, for example, the amount of startups was actually kind of dropping from the beginning of 2000s. Do you see this like being true, or there is a rise of the number of startups in comparison to maybe a few years ago when you started?
US versus Europe, or what
in Europe.
I mean,
and maybe in US.
I mean, so I'll start with just a personal example. When I started my company, most of my friends and my environment worked at large corporations. They were like, "Well, why are you quitting that job with a golden parachute and fantastic conditions to start with the company?" And now the situation has changed, right? I mean, we've reached, let's say, peak hype of people wanting to become a company founder, a startup founder from all over the place, to, let's say, a more sustainable level where we see, I would say, an equal level of companies being founded every year, more or less, in every city, in every country in Europe, and also versus US, if you compare it. And I think one of the most interesting metrics that you can say about the current state of European tech is that it's improving. Conditions for founders are getting better because there's an abundance of capital in the market. But then if you compare it to the US still has 3.4 more, a multiple of 3.4 more capital available for companies to get founded there. So there's still a discrepancy there, and
it's huge in my opinion. Like, it's very big.
It's huge. And
would you actually suggest a company to? Because you mentioned that, I wanted to straight away put it in that some companies we interviewed before, they get no rejections in US and they get a lot of rejections in Europe. So like, my heuristic is, if you're in a poor country, go to a wealthier country. Like, is it a flawed heuristic?
I think unfortunately that's kind of true. But the question is, how do you get in? And you need to get a visa to start with. You need to rebuild the team there. If you're coming from, let's say, an Eastern European country, and trying to move to a Western European country and you want to move to London or let's say Amsterdam, you know, the life expenses and business expense increase by a multiple or a multitude. Same goes for Silicon Valley. You know, it's absolutely unaffordable to have a place in downtown San Francisco or even in the suburbs. So, you know, those are kind of like the conditions that I would say disallow companies to actually move out really easily. But if you can get your way to Silicon Valley, that is not necessarily a bad idea, because what I see a lot of European founders do, and I think that's one of our biggest actually mistakes, is they build products that are beautiful, but they build products that are actually much more extended. Whereas in the US, they start with the prototype, they put it on the market, they throw 45 million at it, and then they go to market. And yeah, of course, the future will tell us, what's the best strategy, because we're also seeing, like, say, a downturn in the, quote-unquote traditional Silicon Valley mantra, where profit is now becoming a thing. So companies are looking at unit economics and trying to make a revenue first. So we're seeing kind of a switch.
You mean that now happens in US, so they want revenue first? Because kind of in past they go really in further future, like, right. And in Europe they're like, where's the profit now?
Right. I mean, and I think we see a change. So we see European founders becoming less traditional, or let's say more open to fast track a little bit, and I think that's better and better. And in the US, you see, I mean, they are still kind of like in some areas, in some aspects, further along in the process. So they already made that turn. So if you look at some of the top venture firms in Palo Alto, Sandhill Road, they're already advising their CFOs to, if they raise an investment round, make sure to step on the brakes a little bit, reserve some of the capital in case, times might change and it might become a little bit tough.
You mentioned about how in US they have the culture, first kind of sell and like maybe even create MVP and then go. And in Europe it's kind of, even in Eastern Europe it's even less like that. People want to make and then only sell. And in Western Europe still also like that. What would be your TLDR of how would you suggest a startup to start? Would it be maybe like sell first, or if it's a product which really needs MVP created, and like sell that and then start looking for investments if it's an investment suitable company?
Right. I mean, there's been many books and articles written about this topic, right? And how to effectively grow and scale a company. And there's many different opinions. It kind of really depends. Let's say, are you doing this for the first time? Do you have, let's say, already experienced co-founders around you? Are you doing this on your own? For example, that's just on the team side. Then, which sector are you in? Are you in an established market, or are you trying to break open a new market? Let's say in fundamental technology. Let's say you're in, right now, today, you're in quantum. And take the company in Delft right now. For example, Delft Circuits. They're building this technology, which essentially is a quote-unquote coax cable to capture all the quantum cables that are attached to the mainframe. And they have to build everything from scratch. So they have to build their own production facility. So they have 15 people working on that. So they have to break open the entire market. And the entire market size today in 2019 is 100 million. There's like 4 or 5 of these things sold on a yearly base. But the prediction, of course, by 2025, the market will be 2.5 billion. So, what's the right time to start in which particular area? It kind of really depends. And also, I would say, what to do first. I can't really give you any advice on that. What I can tell you is, in today's society, if you have, let's say, experience, if you already have, let's say, a good co-founding team, I would never, ever go for an acceleration, to be really honest. I don't think that's going to get you anywhere except for losing 6 to 8% of your capital, of your cap table. And the question is, for what? For a bit of pizza money and access to mentors that might not actually be the best ones for your company? That's something I find hard to believe. What I do believe in, and I think that's actually where Europe comes in, we have a lot of really good universities, right? These universities typically don't have that much sense on how entrepreneurship works, but they can provide you, a wealth of knowledge and open up, let's say, IP for the company that you're building. So a quote-unquote incubation program might typically work, also because there's no equity involved, so you keep ownership to the team, which I think is good. And then from the next step, it's actually pretty simple. If you manage to find that one person in your market who is the absolute world leader, or system thinker, and has a bunch of capital and wants to invest and wants to become an advisor, you have to take that money, for sure. If you're talking to, let's say, a person that you feel uneasy with, or it doesn't really resonate, and you're kind of like unsure if they can help, then don't. So, and then what type of growth path would you pick? That also kind of depends. I'm not a fan of growth above all costs, but I do accept the fact that sometimes you have to cut some codes and you'll make it up, and it's going to cost a lot more in the future in order to stay ahead of the competition. So there's so many different angles to cover here, and every path is different depending on sector, stage, also industry we're in, and capital in the market available in the particular city that you're in. So yeah.
Do I assume correctly that you get reach out from other startups? Is it quite frequent basis that startups reach out to you?
Right.
What is like the number fields which you say guys, you don't need investment, or you will not get it now, or your field is not really investment suitable? Because number one is how scalable is your business? If it's
right.
an internet, probably you can start speaking about this, because this was a personal question. I asked a friend who's in these fields. He's
right.
He wanted to know this.
Right.
What's your opinion on that? Which kind of business shouldn't even think about, except maybe the scalability part, because that's kind of everybody knows that.
Well, I mean, it's a question. I mean, which kind of business shouldn't think about raising capital? The business that is already profitable, right? I mean, I was talking to this one SaaS company the other day, and an enterprise SaaS company, right? They were doing 40%, so they were doing a 2.5 multiple every year, 40% profit margin, which actually means, if you think about it, then they're doing as much profit in 1 year as the total amount of revenue in the next year is going to be. So they actually don't really need an influx of new capital. So for them, for example, getting an investment doesn't make any sense. I would say, are there any particular industries where I say it doesn't really work for? Well, I mean, anything that doesn't scale. So I mean, of course, if there's no market for your product, or then it's going to be really tough to raise capital at all. And of course, I see I see thousands of pitch decks starting with, we exist to disrupt markets or incumbents in A, B, or C. And to me, that, for example, that approach also doesn't work anymore in 2019, because you have to partner up. I think we're entering this more, let's say, more inclusive, collaborative society, where it makes sense that incumbents change their role, and then within the changing role, the startup has a particular, let's say, part to play. But to start by saying, we're going to do this with A, B, or C, for me, for example, doesn't really open up the discussion much. So I would not typically start with that.
Also, coming back a bit to Europe, several companies pretty much, probably I'm in a bubble there, but in Enschede there are many companies that I spoke to. They constantly say how, also I don't know what exact investors are that they constantly want the control of the company in Europe. Is it valid, or am I in a bubble?
Yeah, well, to be sure, or for sure, it's tougher when you're in a closed, smaller ecosystem. For example, Enschede or Groningen versus, let's say, Eindhoven or Amsterdam, or for example, London or Berlin. And that's also some of the experience that I take from traveling abroad a lot. I mean, the conditions in Europe are not that bad, depending on how careful you are with who you talk to, right? So every market has their own crazy consultants that are charging ridiculous fees to be in part of a transaction, or they're trying to do sweat equity deals, which actually I don't really like at all, because sweat equity comes involved. It's actually someone who helps you out. You become dependent on a person, and then the sweat equity runs out, and they exit your company again, and you're left with the disaster. So, but I do see a lot of founders that are kind of really struggling to get out of their own personal closed bubble, and I think for them, my advice would be just look at also what other founders have done, right? So for example, if you look at the Enschede market, there's a couple of really cool companies right now, Tiled Media, Code Sandbox, who raised money at
But
the
they raised from mainly US.
Right, but you can ask them, they have a fantastic list of angel investors on board. The former founder of Katowiki, and I think, just to name one person. And then, so for example, if I was a founder, I would actually go to one of these guys and say, well, could you maybe introduce me to one of your investors, or could you help me out with the investment process? And it's also kind of like a good sense check for yourself, because if they're willing to do it, that means that they also believe in your idea. If they're kind of hesitant, it means that you might need to tweak, some more on the idea left or right before you actually can continue to do that type of stuff.
So reach out to other founders.
That's just to start with, yeah, for example.
You mentioned about Israel in one of the talks, that many people approach and they were kind of rude and pushy, and then you said it's also kind of good, because Europe is kind of different. A second point is also the urgency. It's
right.
Much more calm and not as rude, not as urgent. And US I feel is different, probably Israel. What's your view on that?
Well, I mean, I can tell you, I got a lot of. I mean, I got a lot of shit actually. The first time I told just the company that I wanted to have a 10-minute Skype call, and they're like, "What? What do you mean 10 minutes? I'm not worth an hour of your time." It's like, no, I mean, that's not the case. I just want to get to know you really fast, right? So start with this. Share me all the data that you want to share and that you really are prepared to disclose, right? So don't share any secrets up front, but share me the base. I'll read into it. I'll prepare my questions. Then you prepare the problem statement that you want to ask me, and then we start. We spend 9 minutes and 30 seconds on actually figuring out if there's a match, or we can find a solution for you if it's not a match. And I remember, 4 or 5 years ago, it was actually unheard of to do this anywhere in Europe. And now you see that it's changing a little bit. But still, to be really honest, when some of my friends come over from across the Atlantic, and they try to meet up with people here, it's like, what? My calendar's full, and let's meet up in a month. It's like, what do you mean? I want to meet up tomorrow. And so, for example, I try to have this philosophy where actually someone reaches out to me and says, can we meet up in a month? I would actually answer back in the most polite way, because it's also his opportunity cost or her opportunity cost and mine as well. But I mean, if you want to meet up in a month, let's ping each other in a month and let's keep our schedule free for now. I mean, I'm available tomorrow or maybe even this afternoon. And so I think that mentality is something that came over from the US. The Israelis have the same thing. I mean, the startup ecosystem, if you look at it per capita, is insanely developed. Of course, it has some fundamentals in the way the country is actually in a constant state of crisis, right? So it actually has a not so really nice background.
Which country do you mean? Israel?
Israel. Yeah. I mean, of course, there's so much going on there, but it does mean that they have this, let's say, constant, I would say, fight or persistency to actually pull through. But you also see it on the other side. They're not able actually to make the billion-dollar exit. So they're a little bit more impatient as well, which also fits in with the culture. And that's why they typically sell quite slightly earlier than the US founders do. But yeah, that's kind of a difference. Yeah.
I will slowly transition to PHX. I now understand like how it probably even formed, from what you just told me, but I had very specific questions. Or actually, you can tell in short like what is exactly, because people probably will not know. So if it's a TLDR, because you just connect many interesting people, right?
Yeah. Well, I mean, maybe I should start with how it started. As an absolute TLDR, but I mean, it started in 2016. Like I said, I was being reached out to many founders. I took a lot of stages. I got a lot of time on the radio, and was very appreciative that I was being reached out by as many people. But of course, you can only split your time in limited ways. And I kept on getting the same repetitive questions. How do I get the first founder? I'm not really sure what to do with this deal. Is this a good term sheet? And I realized, this is a universal problem. So actually I called up the city of Amsterdam and said, I have this crazy idea. I want to rent an island near the city of Amsterdam. It's called Pampas Island.
This is one of my questions. How did you rent an island?
Right. No, I went there myself. I reached out to the foundation behind it and said, I told them the same thing. I have a crazy idea. And I want to rent this island to bring in people from all over the planet, but at first from Europe. And actually, so Phoenix started out as Angel Island, which was a particular unconference where we would just basically get people on a tall ship, without actually knowing who was there. And then this was particular on the capital side, right? So it was angel investors and business angels from my personal network. And then we would open up to founders that would sign up. So the first year we had 3,500 founders sign up. We selected with the most objective way we could, based on different questions. Meaning it was not about how far you are, but the way they answered the questions gave them access or not. How open-minded were they, or did we feel that they could actually survive a very unconventional format? We locked them on the island for an entire day without name tags, without keynotes, without program, and that's how it started. And then, to be really honest, so Angel Island and actually Phoenix was never meant to become a recurring thing. I mean, after I reached out to the city said, "Oh, well, let's try it out." And then they gave a little bit of starting capital as a partner, which allowed me to rent the island and get some of the first bookings in. And then actually I pinged some people that were close to me that were some real community people as well, and I just sent them a short message on a Saturday morning saying, "Hey, you're gonna love this. Meet me at 10." And they met me at 10. We took the car to the boat. We sailed to the island and said, we're gonna take over the island for a day in September. And that's how it started. And it's also why we decided actually in 2018 to kill Angel Island, which people thought was a crazy idea. And I think it's also very misunderstood, the reasoning behind it. For me personally, it just didn't feel right anymore to focus on just the capital side, because building a sustainable or a good company has nothing to do with getting more capital on board. It is finding the right people around you and building a good culture. And that's actually why we decided to kill it. So we wrote this letter, which contained all of our complaints in technology today, and we talked about stuff like lack of diversity in technology, bro culture in tech, the fact that there is so much happening around community build or burnout. People that really give a shit and that are helping so many other founders or people succeed in the ecosystem, they typically are not rewarded by anyone. So the system is, we thought or think the system is flawed, and we handed out the letter to all the participants on Angel Island, the 3rd edition. So we had 550 people sitting on the grass instead of a formal big opening. Although we did have someone actually jump out of a plane with the box of letters that dropped into the water before we gave it to the guests. But okay, other than that, they read the letter in silence for 10 minutes, and then we asked them to join us in the fortress in the middle of the island. And if they wanted to commit to doing better, that's how we ended the letter as well. They were supposed to burn the letter. And next, so it was pretty crazy. So actually at the beginning of the unconference, we killed the unconference, which was a really interesting and freeing setting for the people on the island and also for the people behind the island in the organization. And essentially, the burning of the letters was the rising of the phoenix, more or less. So out of the ashes, we could sort of like emerge and create something completely else. And I think it is something completely else now.
You mentioned because the goal is, it sounds kind of a bit utopic at this moment, probably
Right.
very, very bright. But do you think is it possible to compete against these shark companies like Uber and stuff like that? Do you think it's impossible against the US, who is money number one? Is it realistic, or is it just you shouldn't enter those fields then?
In which sense do you mean?
Companies in Europe, let's say there's a company who has these bright, forward-thinking ideas that it should be diverse and stuff like that, and then there's this very aggressive, just for-profit American company.
Okay, right. I get what you're saying now. I mean, to be really honest, that's not the point of the reason we're building Phoenix. So Phoenix is, the main premise started out to say, we're here to connect the unconnected, which means we want to bring, the world's top scientists, Nobel Prize winners, billionaire philanthropists, impact investors, regular investors.
This is non-profit, right?
No, it's a normal organization, but it's always built as a voluntary base. So up until...
Because how do you get those people, Nobel Prize, or you just reach out to them?
So I've been in a lucky circumstance that I've met a lot of these people now. I mean, the reason I was actually able to do this is that every time that from being a founder, from becoming an investor, I realized there's always another closed door. And I started to basically just, first gently knock on the door and then put my foot in the door, and then I actually would break down the door and would bring in some unconnected people into the organization or into the platform. And I started really enjoying that. And I think people, felt it was based out of pure passion and authenticity. So I built up some really good relationships with some exceptional and also crazy interesting people from all over the planet. And they're also kind of looking for something new, because to be really honest, it's not that difficult to have, let's say, someone who's starting out in his career, or a starting creative or a starting artist, to get that person engaged, inspired, or transformed. But it's pretty damn tough to get someone who, quote unquote, has everything to find a new purpose in life. But guess what? These people are also looking for purpose. And the purpose is not longer alone about the money. It's about completely different things, I would say. And so, our goal is to find these original thinkers and thought leaders that can inspire others, become a mentor or a fellow in a very unconventional way, not focusing on how good someone is, or actually not even disclosing their identity, right? So if you look at the website, we don't even tell who is on the island necessarily. We don't use identities on the island. So yeah, you could sort of sit next to someone and then completely unexpected, that could become the big advisor in your company. And what we would actually do on the back is actually we would engineer and stage it up front. So we were highly selective on the connected part. So the half of the audience is, let's say, some of the most powerful people in technology, and the other half comes in via all the different challenges and references. And those are the people that we want to quote unquote connect with these individuals. And then we place them in unconventional settings and shoot them through burning hoops and have, let's say, some really out there things going on in order for people to feel more on a personal level, to engage on a personal level, to connect and have a meaningful day.
What do you think, like actually now it's going to be more closing and more these general questions, is what I would start with what I started in the very beginning about the Slush, because it's very general, like it's this very hypey event.
Right.
Yeah, what's your view on that? Like how useful is it actually for like real founders, and what actually happens there in real?
I mean, I have so many things to say about this. I've been to Slush myself for 6 years. As a speaker, as a guest, I typically host dinners there as well. What my personal experience is, or my personal idea around what you should do or not do. I mean, I would not go to Slush if you essentially don't have any idea what it is to start with. If you are too early, which a lot of people do, and I think one of the biggest lessons learned from being in all these different cities and talking to all these big stages is that if you're a speaker or you're an investor or you're this original thinker, and people fly you in, you get access to closed doors, there's special treatment, there's special speakers rooms. Even in the hotel, you're going to meet everyone that's actually quote unquote top of the list. And same goes for the investors. They get all the access, they get the private side events during the evening, and this is essentially where the magic happens. And as a founder, it is going to be extremely tough to hack yourself in there, but there are ways to do that. I mean, there's this one, a friend of mine, for example, she did something brilliant. There's this one karaoke party, which is always kind of like the thing, right? So all the top people that you potentially want to meet as an investor or advisor are there. But there's also a queue and no way to get on the guest list. So what she did, she actually went to the venue in the afternoon, handed over her luggage and her coat, got a coat number back, and then came back in the evening, past the queue of 500 people saying, hey, I was already inside, I just went out for a smoke, and she passed in, hacked herself way into that thing. So there's always opportunities and ways to get in, but the question is, can you do it in a fun, nice and open way? It doesn't really work if you want to break in the door, of course, literally speaking. But if you manage to do that, and one of my big things would also be is like, find that person who actually has the experience to hack these type of conferences, and otherwise, don't go. Absolutely no, because it's going to be extremely tough to meet the people you want to meet, unfortunately, and that's also one of the reasons we built Phoenix, is we don't want to build something that competes with others. That's absolutely not the point. The point is to build something that hopefully enables others to become more open. I'll give you an example with something that I love and that I hate. The World Economic Forum.
World Economic Forum.
In Davos, every year, 1,500 billionaires fly in with their private jets to listen to David Attenborough talk about climate change. Then they fly back in their jets to their respective home and they continue with their business, right? Of course, I'm exaggerating. There's a lot of good stuff happening, research coming out, and some money spent on some, impactful themes. But it's connecting the connected. It's, people that are already in power and play talking to people that are in power and play. It's a party for the few, and that's kind of a perception you want to break, and that's also, I think, why guests feel Phoenix is different. I think that's also why
there is no this exclusivity.
No. And that's, I think, also why they call us, let's get a combination between World Economic Forum and Burning Man. And that's, I think, the other thing that I want to mention is that people think that Burning Man is just, let's say, crazy, out there experiments with people being on drugs 24/7. And although that might be the case, it is also the way, for example, and I'm not sure many people notice, how Eric Schmidt became the CEO of Google, right? So Sergey Brin and Larry Page, they were on the hunt for a CEO because one of their biggest investors says, guys, you're brilliant, but you absolutely suck at running this company. So if you want me to invest, you have to find a CEO. So they had 20 conversations, and because these guys are a particular breed of people, the candidates actually didn't want to work with them. So they lost the first 20, and then all of a sudden they found one profile, and that was Eric Schmidt's profile, and it said that he's been to Burning Man, and I thought they found that really interesting. So they actually reached out to him and said, well, you know what, Eric, you want to come with us? So they took him to Burning Man, and essentially for them it was a way to see if this person could handle severe conditions and extreme settings. And for them it was a way to actually qualify someone, and that's also why I think it really works as well from that particular side of the play.
Do you have something to say yourself in the ending? Maybe some events happen or just for other people, because usually we focus on founders. Right. I think one of the podcasts actually suggested you to say something, but maybe you have something new now.
Well, I do have something new. I mean, one thing from my side is that I keep on realizing that it's important to be in the present and to surround yourself with people that are, you know, fun, energizing, and that you do something with passion and purpose. And that could be anything, right? And I'm not saying that you should give away all your money, or but there's so many things you can do in a positive way that affects in a positive way people around you. And if you start doing that, it's going to be much more fun to continue to build your business. So I would say that's it.
Yeah, thank you, Ton.
Welcome.